Okay, everyone, I am back. Thank you for waiting around. I had a family event I needed to attend. We're going to get right into the stock market technical analysis. We're going to look at the general markets. I've taken some time this morning and just really tried to get a good read, getting back into the charts. So we're going to look at that and then look at some individual trade ideas, and then we'll wrap up. So starting out here with the S&P 500, again, we don't have a sell signal. There was no reason to short the broad indices. I pointed that out last week, or actually the week before. We had a kind of a short-term breakdown, but we didn't recover, or we didn't actually get a close below our level that would trigger a sell signal. So no sell signal. Market continues in an uptrend, and we continue to build the negative divergences. Those can build for a while. They're not telling you, okay, short the market right now, but they are telling you that you're likely picking up nickels in front of a steamroller. How long can you pick up those nickels? Well, nobody knows. But if I look back on the SPY, it's very similar to what we saw right before the COVID crash, right in this period where we basically were just grinding higher day in, day out. And this lasted several months, I believe. I think this went on for, several months, where we just continued to grind higher with negative divergence right here. And it's actually here on the RSI as well. But it was on the PPO and the RSI. You had negative divergence. You continued to move higher, and then you finally broke with the COVID crash. Now, are we going to get a crash like that? Those are pretty rare in the market, like a big, just straight out of the blue crash. But that doesn't mean we're going to, continue to move higher. I still think the negative divergences are setting us up for a good sized move to the downside over time, but that doesn't mean we can't continue to uptrend like we are for a little while longer. So no reason to short. We're just watching these negative divergences build. Prices continue to move up, and I'm waiting for the sell signal, the next sell signal, which I do not see yet. Looking at the triple Qs, this is really where most of the strength in the market has been. If you look at, let me go back to the SPY. I want to show you what's actually going on today, at least. So you can see SPY is up about 0.6%, but if you go to the equal weighted S&P 500, which is RSP, you'll see it's pretty much flat. It's basically flat today, which tells me that all the gains that we're experiencing today are pretty much from the FANG stocks, which is Microsoft or not Microsoft. I think it's Amazon and Apple today. So two stocks are pretty much moving the market higher for the most part, and it's the FANG stocks. So there's triple Qs. Again, Microsoft and Apple makes up 40% of this ETF, so it's very heavily weighted on the FANG stocks, and that's why I watch it so closely, because the market's not going to break down if those FANG stocks aren't breaking. If they're moving higher or holding up sideways, the market just cannot mathematically go down that much. So I watch the triple Qs for signs of a sell signal, because when we have a sell signal in those large cap tech stocks, then it puts the probability that you're going to have a broad market sell-off in your favor if you have those large cap tech, heavily weighted tech stocks on a sell signal. So again, the last time we came close to a sell signal was right there. We opened the day below the support levels, but they recovered it. I talked about that. Let everyone know that I didn't see that as a sell signal. I was not going to short, and it's pretty much been up ever since. So no reason to short. Again, we continue to build these negative divergences, and they just continue to kind of get extended out. And they're still in place though. So until those are burned through, maybe we keep going higher and burn through the divergences, then it still looks like we're going to get a big pullback sometime soon. But until we see the sell signal, no reason to short. And if you're long, you could just stay long. But again, the market doesn't usually give the longs an opportunity to get out when you're on that sell signal. So you just have to realize that, you might get trapped. It's hard to say. I don't see anything else in the Qs or the SPY. I see an uptrend. I see nothing, no change. Looking at the small caps, again, just sideways. These have gone nowhere. So most of the gains, there's my trading range. Most of the gains this year have really been the FANG stocks. And you can see the small caps are just going nowhere. Just almost a year worth of sideways action, which could be a top, could be a plateau. We don't quite know yet. We do have negative divergence that continues to remain, and you can see right there. And so we're just waiting for a break of the range, to the downside most likely, but it could obviously be to the upside as well. Amazon, so they're buying Amazon today up 2%. They're buying Apple and Facebook. So they're, it's these FANG stocks that are like holding the market up today at least. Amazon's still in this big sideways range though. So I think it's likely, if Amazon wants to test resistance again, that's completely possible. It's really up here at about 3,550. Otherwise, likely going to get rejected and sell down to the bottom of the range. I think that Amazon's likely at least going to come back down to the bottom of the range at 2,930, although it maybe wants to run up and test resistance and then roll over. The bigger picture is we're back in this big sideways range. So Amazon's really gone nowhere for, since July of 2020. So over a year, Amazon has just been thrashing around sideways, in this big range. And that's it. That's the bigger picture there. So we'll continue to look for signs of direction on that one. Google's been strong. It continues to move higher, although it has negative divergence remaining. That has not gone out. We still have divergences, although in an uptrend. So no reason to short. But at the same time, I'm not really interested in being long something that's pretty overextended with big negative divergence. You can see Google's pretty overbought on the RSI. It's sitting there at 76. It can become more overbought, but we're definitely getting up at the top of the range. So overbought on the RSI in an uptrend with negative divergences, waiting for a sell signal. They're popping Apple today. You can see kind of a breakout candle today. So that's bullish. That's definitely bullish, the fact that it's having a good sized breakout candle. This breakout does occur with negative divergence on the short time frame. So if you looked at the hourly chart, you'd see it. Let's go there and look at it. You can see that we basically have negative divergence right there. And we have a new high, but we have a lower high in momentum. And then on the daily, it shows up. Now again, we could continue higher in Apple and burn through the divergences. It's not. So Apple, there's a breakout candle today on Apple. And you can see that it is, we're making a new all-time high in Apple. However, it is on lower momentum, so we do have negative divergences. And again, these things just build. Negative divergence tells you that, okay, be on the lookout for a reversal. But until you see the reversal, you do not have a sell signal. So no reason to short the thing until you can get that reversal or some sort of a sell signal. So right now, what I'm looking for on Apple is a break below this 144.40. Again, we held that support range for several days. And until I see a breakdown of that, I'm not really interested in shorting Apple. So it is uptrending like the other FANG stocks. Let it do its thing. Facebook continuing to build this bearish rising wedge here. And you can see we continue to grind within the wedge. Negative divergences there are intact. And we have a bearish rising wedge pattern. So I think it's likely they're probably going to run up and pop the top of the wedge, chop around a little bit, and then break down. But again, we need to see a sell signal. So if you want to be conservative, you could wait for a break of this red trend line right here. This is coming off your March 2020 lows. No sell signals here either. Just, it's bullish in price, bearish in momentum. Okay, gold. So gold and gold miners continues to hold support. You can see we're basically above this 1790 level, and on the hourly, really on the weekly chart, that's a big level that was major resistance back in 2011, 2012, and late 2012, with 3 tags of that resistance level, and then we went into a big bear market over those many years. So zooming into that key level right there, you can see we dipped below it right here, popped above it, dipped below it, popped above it, dipped below it, we're above it. So kind of battling it out around this level. We need to see a definitive break to the upside. Again, we also have this bull trend coming off of really 2019 area on this weekly chart, but we have support here, support, and then on the weekly, you can see this is your big flush out move where they they sold it off on a Sunday night all the way down to 1680, but by the end of the week it had recovered that trend line, and we are still above that trend line. So that's pretty bullish, and I think we're likely going to continue to hold this trend here and work our way up higher in gold, which should be bullish for the gold miners as well. Here's the gold miners GDX. Again, major support right there at about 3140. You can see that was resistance all through that bear market right here on this weekly chart. Resistance there, resistance all through here. And then finally when we were above it, it's been support ever since. So support here, here, support here. And then there's your little flush out stop raid move right there where they dipped it right below, hit that trend line and recovered. And so far we're above that support level at 3140. So I think that's likely the end of the down move in these miners, and we're likely going to, we could consolidate some more right here, but I think I think the bottom's in for these things and we're going to start to move higher. I like them. They look like one of the best plays right now, and probably, I think they're going to be, end the year pretty bullish. And so that's what I'm looking for, is to really continue to move up throughout the end of the year. And that's how I'm positioned on these things. Some of these short trades I pointed out, let's get into these. We're looking at a weekly chart. This is American Eagle. You can see we're still continuing to downtrend, down a little bit. And I think we're likely just going to continue to downtrend till we run into, 25.92 looks like a pretty good level of support. Here's the daily chart on this one. And you can clearly see we're making a series of lower highs and lower lows. So I think that's likely going to continue. We're going to continue to downtrend. Grab my tool here and work our way down to the next level of major support, which is that level. It's about 26, we'll call it. I like that as the next level. And this still looks good for downward price action. Here's Abercrombie and Fitch, ANF. Again, a little bit of a thrashing action through here, but we're down near the lows. I think we're likely going to continue lower down to 30.50. And the reason why is, the sell signal on this thing came on the negative divergence, but also we had a back test right up in here. And this is where I talked about shorting this stock. So it is still profitable, still downtrending. I think we're likely going to continue lower. BLK coming in for a back test of the trend line. This is coming off your March 2020 lows. We held support here. Finally broke trend, and it's been resistance ever since. So there's resistance 1. We haven't tested that again. It looks like we're right in that area. So maybe we want to do a full back test, but this is a new divergent high, meaning we have a new high in price, and yet we have lower high in momentum. So momentum is still downtrending. I think it's very likely we're going to get rejected right up in here. One of these days here shortly we'll get rejected and start to downtrend. We're not completely downtrending yet, but we are backtesting, and I think we're likely going to start to move lower like that. So these are the levels of support. Major level here at 840.50. Next level here at 790.80. Tesla. So Tesla is basically just, the trade that I'm watching on Tesla. You've got this uptrend right here, and it just on this daily chart, and it just continues to kind of grind up there. But we also are making a series of lower highs. You can see we have a lower high right here, a lower high here, and we have slightly lower low right here. So we're downtrending, not significantly, but definitely a downtrend since basically the beginning of the year, 2021. I'm looking for a break of this trend line, and if we break that, I think we're likely going to move all the way down to this 460 level. We could run up to resistance right here at 780 before breaking. Maybe it wants to run up and do a back test and then break. That's completely possible. So we're kind of in the middle of the range right now. I'm just letting it do its thing. It is, we're starting to build negative divergence again on the daily chart. So you can see here, we're making kind of new highs. That's a divergent high right in here and a new divergent high today, while momentum continues to downtrend. So watching for more downside there on Tesla. Ford, your uptrend line in Ford was right here. We broke trend back here. There's your break a trend or your sell signal, and we're been moving lower ever since. Again, oftentimes when the trend reversals take place, it's not It's not going to be just a huge crash. Usually you're going to kind of break and consolidate, and then finally after consolidating, it'll give it up pretty quickly. So that's what we're looking for here on Ford. But again, it continues to move lower. I see the next level of support, which I think is a high probability target right here at 11. It's about 11.15. I see that as a pretty high probability target. I think we're heading down there in Ford. And that's a move of another 15% from where we're at. So that's my price target on that one for right now. Starbucks continues to kind of consolidate. We could pop here. Maybe we're going to run up and hit resistance again at about 117.70. But again, I still see us heading down here to 109.50 as the next level of support. So any pop should likely get sold into as we head lower. And then we're going to watch for a break of that level. We break that level, I don't see support until we get down to about 101.50 as the next target. And potentially as the final target, this range of support at about 93.50 all the way down to 91.50. And that's a gap right there to fill. We had that was resistance in the past. So I see that as kind of the final potential target, but definitely a high probability target would be right here at this 109.50. And then a little bit lower probability, but likely 101.50 area. So I still think that's a good trade to the downside. And that's really all I have. If you guys are new, check out my stock market technical analysis course if you haven't done so. I leave a link in the description below. And I'm going to just get back into the markets this week, trying to find some new trade ideas. If you guys have anything, leave a comment below that you want me to look at, and I will go ahead and dig into that. Get this video out here before the market closes, and I'll catch you guys on the next one.